So I was just kidding with you. There's not 34, there's actually 41 top covered call ETFs for 2024. What's up, you guys? Welcome back to the Average Joe Investor channel. I have to be honest and transparent with you. I was blown away by the amount of people that commented on the previous video about how many ETFs I actually missed when covering the top covered call ETFs for 2024. Now, truth be told, some of these people were referencing ETFs that truly were not covered call ETFs, though they may be a component of what they're trying to do. But there were some ETFs that should have been on the list, that should have been covered, that weren't. So I added not 1, 2, 3, 4, 5, or 6, but 7 additional covered call ETFs to the list. We've got 41 in total. Just going to dive in right to the results and highlight the ETFs that we missed out on. Honestly, I really like the feedback. I like hearing what I should have done differently and being open to the feedback and the opinions of other people to make my content as valuable as possible. Let it never be said that I am not a man of the people. Okay, so here's the spreadsheet we were looking at previously. It's the same one, just a few different formatting additions here, but specifically adding 7 different ETFs. We had from BlackRock the iShares Advantage Large Cap Income ETF, ticker symbol is BALI or BALI. Then we have from Amplify ETFs the DEVO or Amplify CWP Enhanced Dividend Income ETF. From Rex Shares we have the Rex FANG and Innovation Equity Premium Income ETF, ticker symbol FEPI. 2 from Goldman Sachs, the Goldman Sachs NASDAQ 100 Core Premium Income ETF, GPIQ. And then the Goldman Sachs S&P 500 Core Premium Income ETF, GPIX. These are essentially just like from JP Morgan, JEPI and JEPQ, but obviously by Goldman Sachs instead. Now lastly here, I initially was thinking I was not going to touch any YieldMax. However, there are 2 YieldMax ETFs specifically that have enough history and also are based on more than just one single stock. And that is the YieldMax Universe Funds of Option Income ETFs, YMAX, which is essentially a combination, if we scroll down all the way down here, it's a combination of all of the funds from YieldMax. So since it was more than one underlying stock, I decided to include this one. And then we had YMAG, the YieldMax Magnificent 7 Fund of Option Income ETFs, which focuses on, let me scroll down here, all of the 7 Magnificent 7 stocks, but the YieldMax ETFs. So a little bit controversial here, but I decided to add these 2 for a total of 7 additional ETFs. And here they are highlighted in the spreadsheet. We've got DEVO, BALI, FEPI or FEPI, GPIQ, GPX, a YMAX, and then YMAG right here. We have their assets under management, their stock price, expense ratio, inception date, and dividend yield. And here's where they line up here. If we go ahead and sort this based on largest to smallest, YMAX has the highest yield here at 67%. We have YMAG, which is third at 53%. FEPI at 26.54, GPIQ at 9.81, and then down here, BALI and GPIX are close together at 883 and 780, and then all the way down here, DEVO was at 4.41%. We should also note here for that from YieldMax here, YMAG and YMAX both had the highest expense ratios at 1.28%. So I went ahead and looked at all the numbers again to see what are the truly top 5 with respect to 6 months, 1 year, and 3 years. So first we'll take a look at the 3-year returns. The only one of the 7 that actually qualified for 3-year returns was DEVO, right here, and that actually finished second to last with respect to income for 3 years. But DEVO's never been big on dividend yield. It's been pretty good yield, but not one of their highlights or features. So that's the top 5 really didn't change here with respect to the 3-year returns for income. This is cumulative, by the way. And again, this assumes $100,000 invested at the beginning of the period, not reinvesting dividends. What would the amount of income have been cumulatively during that time frame? Now, if we sort based on portfolio balance, we see a difference here. DEVO is actually the highest portfolio balance of all of them. Number 1 at 110,000, followed by XYLG and QYLG at 105, 104. Then we have PBP at 100, and we had FTQI at 98. From a total return perspective, the top result here was FTQI again. In second place was DEVO at 123. Okay, now let's take a look at the 1-year returns, which is just for the period 2024, January 1st through December 11th. We're gonna first look at income. And by the way, we had 1, 2, 3, 4, 5 of the 7 that did qualify for the 1-year returns. Both YMAX and YMAG or YMAG were both launched in January. So they just missed the 1-year cutoff. So they're only gonna be included in the 6-month returns, just for your awareness. So first we're gonna sort by income. Go ahead and sort largest to smallest here on income. Top result was CLIP which we talked about previously, was the China Internet ETF, which did really well on income, not so well on capital value. We'll look at that in a second here. FEPI was number 2 here at 22,743, which was by far a clean second place and far above third place, fourth place, and fifth place here, which were at 12, 11, and 11. GPIQ and GPIX kind of fell in the middle of the road down here, followed by Bali, and then Devo down here. Now from a portfolio balance perspective, let's take a look at that. Top results here were number 1, Bali, B-A-L-I, which was one of the ones we added at 118,000, though it was very close here on portfolio balance for the top 4, all around $118,000. GPIQ came in at number 6 at 116, just missed out on the top 5, followed by GPIX and Devo down here. FEPI did not do very well with respect to portfolio balance at $96,000, but the other ones, just looking at portfolio balance relative to the $100,000 we started with at the beginning of the year, most of them actually were net positive on portfolio balance. From a total return standpoint, top results here. Number 1 was JEPQ at 126,830, followed closely by GPIQ, which makes sense. They're both the same type of fund that's based on the NASDAQ 100 at 126,642, followed by Bali at 126,167, QYLG at 124, and then GPIX at 124,410. All right, let's take a look at the 6-month returns now. This is for the period January 4th through December 11th. And we are now able to include all 7 of the ETFs that we were previously accidentally excluded, including YieldMax and YMAG. So top results here for income. This is cumulative income over the past 6 months. Who were the top results here? Number 1 was, well, you guessed it, YMAX, number 1. Number 2 is CLIP, KLIP, then YMAG at number 3 at 18,789, followed by QDTE and YBTC. Now let's see how well those YieldMax funds hold up from a portfolio balance perspective. Top result here was FYLG and DYLG at 112,500 and 112,067. Then we got MDST, and then we have FYEE and XYLG here at 110. Bali, Devo, and GPIX just missed out on the top 5. And then from a total return perspective, top result here was number 1, YBTC at 120, followed closely by YMAG at 118, then MDST, AIPI, and QDTE. Now, one of the other pieces of feedback I got in the comments, and I'll own it, was I kind of insinuated that there was going to be, 34 ETFs, 1 winner. And I didn't clearly itemize a single winner, which is my fault. I'll take ownership of that. And what we'll do here now is kind of outline which ones I think might be the best fit for you depending on your goals and objectives, right? Because we have to kind of decide between what we want most. Is it income? Or do we mostly want capital appreciation? You can have a blend if that's important to you, but if you're focusing more on income or capital appreciation, there are different ETFs to meet your needs. Looking at just the 6-month returns, I really do like YMAG here for income, right? Because it was really high on income, and it was also in the top 5 with respect to total returns, which meant that their capital here, the $100,000, only was essentially flat for the year, despite making all of this extra income. Additionally, QDTE right here also was in the top 5 for income and total returns. That's another big winner there. If portfolio balance is more important to you, then we would sort first by that, and you'll see that the top result here would have been right here. MDST was in the top 5 for portfolio balance and total returns, which shows more of a blend between income and capital appreciation. So again, we're just looking at 6 months here, but it gives us the most ETFs to look at here. The ones I would absolutely avoid based on these historical results would definitely be, if we're looking at the smallest amount of income here, it was DYLG, but portfolio balance here would be critically important. This one right here, KLIP, was only worth $79,000. Even though it did create quite a bit of income, it took an overall total return loss for the year. So this would be one to avoid right here, KLIP. Now looking at 1-year returns here, we can see that CLIP was in the top 5 for income in 6 months and 1 year, but again, that portfolio balance is really, really low. If we sort this by total returns, right here, largest to smallest, none of the top income funds here, these top 5 incomes, were in the top 5 for total returns, which reflects that there was some level of capital erosion or a lack of capital growth overall. From a 1-year return perspective, looking at the best balance between income and capital growth, I would say the one that you might want to take a look at here would be FEPI, which is the Rex, Fang, and Innovation Equity Premium Income ETF, because it had really good income at $22,000. It also was relatively flat on its portfolio balance for a total return of 119. Now, there were other funds here that clearly performed better. So the goal here is to maximize total returns. Then ETFs like JEPQ might be a better one here, even though it had much lower income at $10,066, had one of the highest portfolio balances here. QYLD is another great option here at 118. If you look at sorting by the portfolio balance here, all of these top 4 are very close together. But again, if you were looking for more of an income approach here, I would definitely avoid CLIP. And FEPI might be a good option for you, FEPI right here at the top with $22,000. And then lastly, if you're looking for funds that have more of a history here, looking at the 3-year returns, let me scroll back over here. If you sort by income here, the top level of income was definitely from FTQY and then QYLD. So of these here, I like the idea of FTQY here because it was in the top 5 for both income and portfolio balance. If we're looking at it from a total return standpoint here, let me sort by total returns. Top result was FTQY, but Devo was in second place here. So Devo might be a great option for you to get some income if you're really trying to prioritize capital value. Here's a look at the updated graphs here for 3-year returns. You can see right here in green, this is Devo right here at the very tippity top with respect to principal value. If we scroll over here for income, you can see the addition of Devo, which is this dark green line right here near the bottom. So not very great on income cumulatively. Here are the 1-year returns for capital value. You can see quite a bit of clustering in the middle. And at the top here, we did have in lime green, BALI. We also had FYLG. In the light purple, we had QYLG, so a lot of the same funds here at the top. With respect to income here, we had, this was KLIP right here at the top, which is one that we had really avoided because of the capital erosion that occurred. But we also have this one in pink, which is FEPI, which performed very, very well. Didn't even get to the income far outpaced the rest of them. Next to close to here in light blue was LQDW. And then lastly here, we got the 6-month returns, which are very convoluted because there's a ton of ETFs here, but by far the top result here in light blue was FYLG, followed by DYLG. And again, this is capital value, not total returns. MDST near the top as well. YieldMax was down here near the bottom with respect to capital value over the 6-month period here at $91,000 approximately, though it did make up for that quite a bit with its level of income. And here are the 6-month returns with respect to income here throughout the period. All of them started at 0. Top result here was in light pink at YMAX, followed closely by in blue KLIP. Then we had other funds that were close as well. So I wanted to give a special shout out to those of you that commented on the previous video, gave me that valuable feedback, hopefully gave me the grace to actually put this new video out and watch this one to make sure I captured all of the right data, included all of the ETFs that I accidentally missed out on the first video. Be on the lookout for future videos. We're going to take a deeper dive again on all of the YieldMax ETFs at the year end 2024. We're also going to take a look at dividend ETFs, traditional dividend ETFs, not ones that utilize options. We're also going to do a comprehensive high yield ETF look. That's going to include all of these, but also all the single stock ETFs. It's going to be probably like 60 or 70 ETFs. It's going to be wild. So make sure to watch out for that one. Hopefully you found some value out of this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of these comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.